going on, guys? Today we're going to be learning about options and how to perform and execute them on the platform of Robinhood. That's what I mainly trade on. So today I'm going to be teaching Devin how to trade some options and what options are. Usually it's the other way around. Devin's usually teaching me about Amazon FBA. So, first let's start with what an option is. So an option is a contract that you're buying for a stock at a certain price with a certain expiration date to fulfill this contract. So today we're going to be looking at Mara. We're going to go in depth into what I just explained on that definition because that is kind of a little confusing. The simplest way, we're going to go pretty simple, pretty beginner today on what to do. So Mara, ticker symbol Mara is a Bitcoin mining company. So, whenever Bitcoin kind of goes up, it kind of follows it, and it's way cheaper to buy. So if you're following Bitcoin, this is a great stock to follow as well. So we have two categories here. You could either buy call options or sell call options, or you could buy or sell options. So I'm going to break down the difference. We're not going to worry about selling in this video. We're worried about buying contracts and executing contracts for day trading purposes. So we're going to be buying call options. And what a call is when you're betting on the stock to go up. Right? I think Mara is going to go up within the next couple of days. So I'm going to buy a call option on it going up. So you're betting on it going up with a call option. And you're putting it down and you're betting on it going down to the certain price. Right here, we have the expiration date. So it's expiring June 7th. So basically all this means is that you're buying a call contract right now that expires on June 7th. So you have from here till now to execute this contract.
And that contract slowly depreciates its value as the days go on, right?
Correct. So the closer to the date that they're expiring, it's the time value of money. So it's losing value as it gets closer to the expiration date, therefore losing more value. So
Like
that's
if you
why we day
buy,
trade these. Yes, we day trade these, within the day, and you don't really see the effect of the time decay
so
with
if you
these.
buy one to expire that day at like market close, as it slowly, approaches 4 p.m., the value is just slowly going down. So you gotta like make your
Yeah,
money quick
correct.
on that, right?
And one of the biggest things that you do not want to do, a big no-no when trading options, is trading on the actual expiration date, right? It's going to expire this day, right? So do not trade options on June 7th for the expiration date. If you're trading on Friday, I would, trade a little bit out, like give yourself some time for, the stocks to go up or down, depending on what you're buying. So I would trade if it's June 7th, you're trading June 14th options. So you have 4 days for this contract to get into full effect for it to do what you're actually trying to do. So let's break this down as well. So what are all these numbers on here? We got the share price right now currently is sitting at $9 or $19.60. So that's the stock price. Anything above the stock price for a call option is considered out of the money. So out of the money, it means that the stock has not actually hit this price yet. And therefore, these contracts are going to be cheaper than, the in the money, which is, the opposite, which is all of these, which are below in the money. So what all this mean? We'll get right into this right now. So we have this contract right here, which is, a one in the money. So it's for $19.50, which is the strike price. So the strike price is what you're actually getting the stock at. You're being rewarded with that stock at the end of your expiration date. So it says right here, the contract is worth $89. So if we're going to review this here, one contract, we'll type it in for purposes. One, right? So it's $89. because it's 100 shares. So one contract is equal to 100 shares of the stock. In this scenario, it's Mara. So it's 1 times 100 shares per contract. So each contract, you have to keep in mind, is 100 shares. But for what I'm doing and what the purposes of this video is, we're day trading these. We're not worried about the shares because we're never actually executing on the option. We are just day trading. We're middlemaning these contracts to someone else who's going to buy these, potentially could exercise them. So in this, we have a long call, which is one contract, and then this is the limit price. This is where you type in what you want to purchase it at. It usually does it for you on Robinhood. You could set in limit prices on different, let's say you want to get it at $85. It'll only fill if it actually does get to $85 in here. And then, you could put in your time to enforce. I usually just do it right away because I'm buying it quick and then I'm selling it even quicker. Okay. And then how you actually buy this, you just click review and then click submit. And then it submitted and it should fill. And then you got your contract. Okay, so it's the same with goes with puts. Okay, but puts is you're betting on it going down. Okay, so you're gonna buy a put right here. You're gonna type in the contract amount, however many you want. I'm gonna go 1 as well. And then this put is worth $102. So you'd review it and submit. Very simplest form is how you execute it. Go in, click submit, and it'll fill. Okay, so let's go back to Mara here. And this is kind of what we're looking for when we're trying to buy, certain options. It's just like buying or day trading a stock, but the options are inflated. So what is the benefit to trading options versus day trading the actual stock? Okay, so we're going to look at the calls today versus the puts. Actually, this isn't a great stock for this. Let's look at NVIDIA. NVIDIA is the, biggest stock going right now. So we're going to go trade options. We're going to take a look at this. Look at these percent changes. All of these in every single column right here. It changed. It went up 130% since market open. So if we take a look, we have the high today is $2,350 per contract. And the low was $1,295. So the difference of that is almost $1,000. So if you bought it at the low today for $1,200 and it could have peaked at 2,300 per contract. This is for one singular contract. So if you bought 10 contracts, you're making $10,000 and 100% return, like pretty much. And that's why it's completely insane. Because if we go back to look at NVIDIA's actual, chart for the day, it did go up $53, but it's $1,000 per one share. So you're buying one share and you're making $53 today, as to where if you bought a contract for NVIDIA for even the same amount, like the same price, it could have went up $1,000 rather than it just going up $50 as a stock alone. That's the benefit from trading options rather than day trading the actual stock. Devin, you have any questions?
Nah, man, you're explaining this pretty good. I appreciate it.
Solid. So this is how I did today. I'm going to be live trading from 9:15 or 9 o'clock. I'll hop on to usually 10:30. So from my personal experience, the best time to trade is from 9:30 market open to 10 o'clock. This is where you see the most volatility. This is where, everyone's trading and most volatility. With options, you want the most volatile stocks. You need the volatility. You need things going up or you need things going down a lot. you're betting on volatility. So today I made a play on Tesla, right? I bought close to 930. Tesla shoots up. I'm up $1,000, right? You sell. We could break it down. You guys could follow me on my, live Discord, and I'll show you how I go through it, how I set up, when to buy these, when to sell these, when not to. But for the purpose of this video, this is just how you actually exercise a contract. And this was GameStop today. I don't even want to get into this thing tanked. They halted trading on it. I would not mess with GameStop like this, especially with trading options. You could get screwed over big time, especially when they halt trading like this. But I think that was solid, Devin. I think
Yeah,
covered it
man, no, that
all
was great. That was
pretty
great.
much.
I'd like to know, I guess we could probably turn this into a, in a separate segment. This is a really good, like a 101, very basic level. I understood it. I appreciate that. I think I'd
Mm.
like to know a lot about like, your exactly what you're saying, like your thought process for how you're going to set up your trades. What's an indicator to whether the stock is going to rise or go down at market open or through the day.
Mm.
I think we should do definitely a crash course on that.
Like
So
in
that I'm
depth
sure
video
will
of
be
that.
to come.
I gotcha. Yeah, let me see it. We'll kind of brainstorm some ideas right now. Like crash course, reading charts, reading charts. I'll probably
You
do
base your ideology kind of more off of, the patterns that a lot of people do, like double bottom, for example, stuff like that, or breaking
yeah.
resistance
See, I,
lines, or
I
do you kind
trade
of
more
just
on like my intuition. Like I trade more on like kind of how I feel the stock's gonna go. But I use
relationship you have with the stock kind of thing?
yeah, yeah. So I trade within, 4 to 5 stocks usually. So it's like you watch them over time and then you will recognize patterns like the double bottom and shit like that.
Mhm.
So it's like today, literally, I've seen it so many times that Tesla shoots up and it sells off quick, right? Like it'll sell off, like it'll hit a little top, hit a like resistance today. So I was up, I want to say 600. I was up 800 and I hit a little resistance and then I went back down to like 600, 500. And I was on live with Casey and I was like, yo, don't sell, don't sell. Like this is not it. Like it's just hitting resistance. It's a fake out. I call it a fake out, right?
Yeah,
Fake out and then it fucking shoots up again and then we're up again and then we're up to 1200 and then like we're chilling,
you're
but it's
screaming.
just kind of recognizing these patterns. But it's like you're gonna notice the patterns for yourself. I can't even, like, the stock market's different every day, so it's hard to kind of read and like do that. You kind of got to do your own analysis of that, or just follow me like what I'm doing. I would say that. But I would definitely learn to understand the charts for yourself. But I will make a video on how to actually read the charts, what you're kind of looking for, what's a good indicator of if it's gonna, go up or not.